Pedro,
Hey Dale, how are you? Sorry for the
I'm doing
confusion.
great. I'm doing great.
Sorry for the
So,
mix-up. I figured since I could do audio only, I could jump on for a while.
oh, cool. So, all right. And I'll move around a few markets, but why don't we start off with the elephant? And what do you think about Jerome Powell's statement? And do you think he's giving good advice to tell millennials not to buy a house that they can't buy anyway?
Well, I think
You
what's
know,
amazing about Powell's statement, I mean, what's amazing about the action that we've seen thus far is that we've had four Fed meetings so far this year, and they've moved by four different magnitudes at each meeting. And I find that really incredible as somebody who's covered the central bank for 20 years and a central bank that's tried its hardest to be predictable. I think it shows you the level of uncertainty that they're grappling with right now.
yeah.
Also, the last minute pivot through media leaks was kind of
Yeah. You
a
mean the trial
throwback to,
balloon?
yeah, it was a throwback to past practice. I wouldn't even say it was a trial balloon. I mean, it was kind of a done deal once it was out
Out
there.
there. Yeah.
It was,
Yeah.
it was framed as such. And that I guess one of the positive ways that people framed that was that he exchanged his forward guidance credibility for his inflation fighting credibility, and in terms of trying to get ahead of the curve because he'd seen a bad number.
Okay.
So that might be the case. He's a pragmatist, but it's very hard to see what path they take from here that doesn't crash the markets or the economy, basically.
Well, let's talk about a little bit about the market reaction to it. So it's one thing what he does, and a lot of people do believe he's being led by the market, but look at the 10-year reaction from it. So, um, we had this. We were here before the meeting, and that was a pretty big reversal day that we had, where yields came down. The movement was um, fairly impulsive. Uh, what's the market saying with that reaction that they want to start pricing in recession now? The bonds look like they might be forming some type of low here. It looks like at least short-term rates did peak. Whether or not something develops from here, I think it will. I'm wondering what's the market's reaction and what's the market saying about Fed policy now.
I mean, the first order of business is that the market's just saying that it has no clue where it's headed, in the sense that the volatility is just enormous, right?
Yeah.
Also, in terms of a market management, you could argue that part of the reason for leaking the 75 basis point news was to manage the market's reaction, and
Yeah.
that was the goal. That was a complete failure because it actually led to a double sell-off, right? The sell-off that, and I'm talking about equities here, but the sell-off uh, that followed the original news, and then people, kind of bought the news and then sold hard the next day again.
Yeah.
So I think you're right. I think the market is pricing in a chance of a decent chance of a recession. The debate has shifted from soft landing to recession to shallow recession versus a deep recession, I think. And I think that's where more the market's questions lie at the point. I don't know very many kind of market economists that haven't built in some kind of recession expectation for next year. It's a question of, time and depth.
And it is possible we had some type of break, pretty substantial break in crude oil. What if we have a break in crude oil going into, the next couple meetings? Could he say that, we're not going to ease, but we're going to watch and see what happens? Natural gas, I mean, some of the real villains in the inflation fight. I'm not saying if oil comes down that gasoline's going to come down commensurately, but shouldn't that be a help and almost give him a little credibility? Say we take oil to $80, and that would take a lot of interest rate heat off him.
It would partly, Dale, but the problem is that the other components are actually more persistent and they're likely to hang around for a while. So even if there's some kind of inflation easing later in the year, moderation, the next couple of months are unlikely to pick it up even, right? And
Yeah.
so by the time they get to the July meeting, it's unlikely to shift from the baseline of 75. And then do we have enough time by September to know whether inflation is actually seriously easing? One of the components that I've written about is you're just starting to see the housing price surge effects into owner's equivalent rent. That happens with like a 9 to 12 month lag. So the CPI, the shelter component of the CPI is getting really hot and unlikely to abate. And also he'll have a hard time making the pitch that as someone who's supposed to be looking through, energy prices, that he can make that decision to stop hiking on energy prices alone, right?
Great point.
And so I don't think he can just hang his hat on a potentially temporary decline in the price of oil in order, like they needed to see it broad based, and that's going to take a while.
All right, can we switch gears and talk a little bit about his speech?
Yeah,
or address that he made, and he brought up currency.
absolutely.
Yeah, that I think is undercovered. Tell us, tell the viewers, what he said and what your thoughts are about that.
It was a pre-scheduled. Absolutely, it was a pre-scheduled. He was participating in a dollar conference. I forget who the sponsor was, but he was basically saying that the dollar's strength is the dollar's stability depends on price stability, and he didn't give us much hint of policy really, but that was my sense, is that basically the Fed's responsible for the dollar's, he didn't say it like that, but basically the Fed is the steward of the dollar's status as a global reserve currency, in part by maintaining the stability of the price level.
Okay, because
normally, what did you make of it?
Normally, you hear of the Fed usually says, well, the dollar is Treasury's department.
That's right. Right. It was kind of it was kind of a weird shift. So what did you make of it as a Forex guy?
That he's setting up maybe a reasons. I think the dollar will be a great sacrificial lamb for the Fed. I think it would help exports. Might be easier to sell debt, and makes it easier to service debt with cheaper dollars too. So,
but do you think that, because my colleague Tim Cooper made the very good point that at least in the recent months, the Fed has this sort of implicit, unspoken strong dollar policy, in the sense that it wants to tighten financial conditions, and the strong dollar is part of that mix.
Okay, then it's another unplanned event. So maybe it's what the Fed wants, but the rest of the world, sure, after that action of freezing assets, Russian assets, probably they don't feel as secure in the system. And I think China's making moves to sell oil in yuan. They already have their Shanghai exchange. I think that was cross the Rubicon moment for the dollar.
Absolutely.
Don't you? I mean, say you were a nation and you didn't know the presidents change every 4 years, and your policy may not be completely in line, to have all of your assets frozen. That's pretty high risk.
It is, although you could argue it's a pretty unique case, right? I mean, Russia went out of its way to to start a war against the European ally, and so I mean, I think that's the reason why we haven't seen a kind of bigger market reaction and a bigger move away from the dollar. A, it's a lack of alternatives, at least in the short run.
Yeah.
But I think B, I don't think people think this is going to be kind of top of the toolkit kind of move for international relations. But your point is well taken. If one president does it, the precedent, and they might use it in a different way. So,
well, look, Trudeau used it for another purpose. Those truckers that were out there had their accounts frozen.
That's right.
So, anyway, everyone get a real big mattress and stuff it in there. So, do you think that Powell is going to be able to engineer, what he hopes to be a moderately safe landing from this cycle?
I have a hard time seeing it, especially because of kind of historical patterns as to how the job market behaves.
Yeah.
And the way that they see the soft landing scenario, it almost has to be this perfectly styled pirouette where they,
Yeah.
like they land on a single toe. Yeah, it's a ballet.
Like the maestro.
Exactly. And so, and what's interesting about the way that they're talking about it is they're almost saying like they can tighten conditions enough so that employers will post fewer vacancies, but not fire people. And I think that we've never seen that happen. And also, I find it very strange how much weight the FOMC has started to put. This is actually almost Greenspanian. You mentioned the maestro, and I think that a couple of the things that Powell is doing have reminded me of the Greenspanian times. One is this last minute pivot almost reminds me of constructive ambiguity, which is the Greenspan philosophy of I can say things and you might understand what I'm saying or you might not.
Yeah.
And the other part of it is it's basically that leading the market idea that also is a Greenspanian kind of concept. So maybe we're back to those days.
Okay. So I guess that, we're just going to have to see. And you would think that whatever he's doing now really doesn't really filter through for what, 6 or 12 months?
That's the
Is there
thing,
a
right?
lag time between policy and its effect on the economy?
That is how at least the theory of monetary policy works. And if that's then I guess we'll get the peak effects of this monetary tightening. And the idea, of course, was to front load it because the economy is strong, and so to do it while the economy could take it, sort of thing.
Right.
But because of the lag, it could be that the heaviest dose of tightening will be delivered just as the economy is crumbling potentially later in this year.
So where would I find if I wanted to come, when I come to MNI, where do I find your columns?
Absolutely. You just go to policy there, where you just were scrolling, and then you click and you go to the right to the Fed there, and everything that's under the Fed banner is written by either me or the rest of my team.
Okay.
See all our
beyond neutral is something that you're covering. What is neutral in your mind right now, Pedro?
Well, that's a really interesting concept because neutral in the Fed's mind is 2.5 to 3, but neutral in the mind of many former policymakers that I talk to who pay more attention to the Taylor rule is really getting Fed funds above the current inflation rate. So the range is, extremely wide between 3.5 and 8, basically. But people really, if you talk to kind of hawkish former presidents like Jeff Lacker, they think that as inflation comes down and rates go up, they need to meet in the middle somewhere at around 5%, which is a lot higher, of course, than the market's currently pricing in. 5, maybe 5.5. So that's a lot. That's a lot more.
How much of a burden is this on, say, for example, when money was cheap, the corporate bond market, LQD, they went out and they borrowed a lot for mainly financial engineering. They didn't go out and invest in plants and equipment or hiring people. They did stock buybacks and dividends. So I'm thinking about them. I'm thinking about the U.S. government that even though we have the printing press, it has to have some impact. This move in rates and just debt service has to be exploding.
Absolutely. One of my biggest fears, not on the government side, but on the corporate and sort of household side, I think that we're not, it's not quite clear how much leverage is in the system because the Fed monitors the traditional banking system, and this whole market boom happened outside of their purview, basically, almost willingly so, because they chose not to regulate the shadow banking system post financial crisis, and so we really don't know where these pockets of leverage are, to your point. So there is a big fear that as people unwind their positions, whatever they might be,
what did they mainly finance the shadow banking system? What was it? Who were they lending to and for what? Everything?
I don't really know. I think it was, it's people call it the everything bubble, right? But it was stocks, it was crypto, it was corporate bonds, it was I think this is a very widespread asset increase.
Yeah.
Actually, I had a really interesting conversation with Fannie Mae chief economist Doug Duncan last week, and he
Okay.
said that one of the things that we don't know about housing is, he didn't use the word bubble, but is how much of a monetary policy led price appreciation is built into the prices. So that's sort of like how he doesn't know how much prices are actually going to fall, because it's hard for him to tell how much of it was a demand element and how much of it was a bubble element.
Yeah.
So if that's the case in housing, look out below.
Yeah. So, because consensus is, despite higher rates, where people aren't going to leave. They couldn't get a better rate than they have the last several years. They can't live cheaper. A lot of them live cheaper than it would cost them to go out and rent. They're not going anywhere unless the villain bank comes to repo it. So there's going to be a supply issue. Therefore, even though it may slow, we have a shortage of housing stock. So don't expect anything like 2008. And then you bring that up, and that would be the surprise, because
that would be the surprise, and it would have to be accompanied by a decent uptick in unemployment, which makes servicing the cost of even that sort of perfectly affordable house that you bought, suddenly prohibitive. That might, and then in that case, who knows what's going to be happening to the rental market if there's an actual decline, right? The rent versus own calculus might actually change in a deep recession. And so,
well, we enjoy hearing from you very much, Pedro, and really appreciate you taking a holiday to come in here. Anything you want to wrap it with?
That's basically it. I mean, my main thing is I've never covered a Fed where you had a full basis point, a full percentage point rather, of possible outcomes at any given meeting. But it seems like we're basically there, right? For the next few meetings, it's 75 or 50, but we really don't know if they're around the corner from a pause or about to accelerate the pace of rate hikes. So I think that, I don't envy traders in this environment. It's really hard to prep.
Yeah, I don't envy being Jerome Powell either. And
No,
maybe they'll even go to some surprise in between meeting action.
Exactly.
It seems like that's what the ECB is doing. Lagarde keeps coming out between meetings with statements. Maybe that's a new way where, maybe you could shock the market between meetings and really keep people on edge. Do you think you might do that?
I think it would take an acceleration of inflation from here, an unexpected acceleration, but I wouldn't rule it out. And I think he's not going to rule anything out either after ruling out 75 and then having to do it. I think he's learned his lesson there.
I remember when, money supply reports on Friday afternoon were big, and at times the Fed would make a decision after that, and they ruined a couple weekends for me. So anyway,
the good old days.
Yeah. So Pedro, thank you so much. We really appreciate your insights, and I learn from you every time I talk to you.
My pleasure. Same with you, Dale. Appreciate it.
All right. So I'll get a hold of you on Twitter, and we'll keep this thing rolling. All right.
Sounds good, my friend. Take care.
All right. Pedro da Costa, everyone. You could follow him at P da Costa on Twitter, and go to MNI and hit the different markets and go to the Fed, and you'll see what Pedro is thinking.
Also, if I could put a plug for my podcast, check out
Fed's. Where do I find it?
You can, it's on marketnews.com, but with a delay, it's also on Spotify and iTunes and Google Podcasts, and it's called Fed Speak. So, everybody check it out and follow.
So if you'd rather listen than read.
Exactly.
So follow Pedro on Twitter and follow his work, and you'll get some great insights into what's happening into an area that no one knows, except maybe we'll start looking at the size of Powell's briefcase. Going to a meeting, right, buddy?
Absolutely. Or the color of his tie is the other guy.
Yeah, Yeah, we'll start looking at fashion. So thanks, Pedro. Have a great holiday, and appreciate you being with us.
Thanks very much.
All
All the
right.
best, buddy.
All right. I'll be in touch.
Thank
Okay,
you.
everyone. So that's our holiday session here. How'd we do today, guys, for the holiday? So we found things to talk about. Deja vu. Oh, okay. Laura, you're welcome. They will be doing the morning edge. So yeah, we got to hang out. Not much has changed, has it? Yeah. So anyway, this may be a good video for you to play over because there was a lot of macro thoughts in here. And we'll see everyone tomorrow. I don't know if we could call it Turnaround Tuesday. Maybe Wednesday's Turnaround Tuesday. All right. So that's a wrap, everyone. Don't just count your pips, count your blessings. Me and the best team on the net. We'll see you tomorrow in F.A.C.E and join so that you have the benefit of being surrounded by excellent traders that are willing to share and help. You're welcome, Tom. I'll see you guys. And Traders Funding Program, if you've gone through a drawdown, or even if you're trading great, check it out.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.